GetCrack. Wake up, motherfucker.
Okay, hold up. All right, what's up? What's up, guys? Okay. Oh man. All right. Looking at the analytics, people. That's all they tune in this show for, huh? Drama. Okay. Too bad. We're doing stock market shit right now. All right, gonna be a big week. We got Iran, we got Israel, we got all that stuff. So that's you checked out the thumbnail. That's what it was. So they're gonna run out of missiles pretty soon in Israel, and then the Gulf states next, and then finally it'll be all exposed. I don't know. I don't know what Iran's plan is, but we're gonna have deployment. Deployment is on the mind here. So let me see. Let's see. What did this stripper say?
Like several military bases, and something I have noticed lately is all the military guys are coming in and they're spending all of their money, and they're just like, it's sad, like they're like kind of depressed, and they're like just coming in like, oh yeah, we're gonna have fun, like we're getting, what is it called, deployed, like we're getting deployed next week, or like this is happening. I don't know. I don't want to spread misinformation or anything, but it's just like a lot of them are really kind, and to see these like young guys that look like my pinky toe, like they're like fetuses coming in and then dancing with them and then being like bye, and then it's actually like making me emotional. Like it's fucked up.
All right. The stripper indicator says we have war coming soon. More acceleration of the war. We're going to put boots on the ground. I don't know what's up. Polymarket says 70% chance the U.S. will have troops on the ground in Iran by the end of April. So April Fools, $50 million wagered so far. Okay, guys, that's it. That's it. We're done here. We done. We doing it. We go into war for sure. There's no special operations that just last 1 month. This is gonna extend longer. I think Israel at this point will run out of missiles. They already have been rationing, so I'll read some articles on that. It's done deal. So the question is, what should you do and play with the market? That's really the question to be asking. Okay, so on Thursday, I said this is what's going to happen, right? I think it's following that plan so far. Hold up. Okay. Blah 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 blah. No. Oh, by the way, yeah, I closed all my shorts on Friday. I'm done with my shorting. There's no more shorting. I think we're gonna bounce into April Fool's Day. We might keep going into Easter if they don't deploy by that time, and then but I think over the long Easter weekend, because the market is closed for Good Friday, so that you have to keep that in mind. They have 3 days that anything could happen. So Bitcoin right now is over here. If you guys were listening to me about Bitcoin options expirations, quarterly OPEX, and all that stuff is the last Friday of the month. So you could tell it was trying to get back to 75,000. That's where it was trying to. Okay, options are like magnets, okay, and the levels, all this stuff are like magnets. If every time there's news, it will do what it does, but when there's no news, it'll try to recover. That's what happened last week. It tried to recover. Once the options expired over the weekend, I mean not the weekend, Friday midnight, okay, our time, because Bitcoin options run on UK time. All right, UK time. So after GMT, midnight GMT, Bitcoin is free to move, Ethereum is free to move, and that's what happened. It just crashed right after that. So you could tell, like, okay, it's magnetized, but once it stops being magnetized, it does. So nobody wanted to buy on that Friday. And then the stock market followed after that. So you could tell with the market, the morning, it just puked. That's it. It's over. That was the end of it. Very interesting, I thought. I was like, well, wow. There's no news and it just pukes with Bitcoin. And you could tell right here that the weakest sectors, IGV and... Okay, is this what I'm looking for? All right, I think this is fine. Okay, so we can look at cloud AI software, IGV down 3.59%, internet communication services down 3%, more cloud, Sky ETF down 3.57. So a lot of cloud, a lot of AI stuff has been down. That's what was dragging everybody down. Semiconductors kind of okay, down 1.63. So people still think that out in semiconductors, if even if they don't touch anything in tech. But on the converse, oil U went up again. So I think that's pretty much the target. So if you look back at my stream, I said back in February, late January, early February, the weekend of, I said buy oil U. And if you bought it at the open on Monday, you're pretty much nearly up 100%. That was my target. That's it. 2 months, 100%. People would murder other people just to get that much over 2-3 years. Come on. 4 or 5 years. That's really good performance right there. So that's it. So that's what the whole show is about. You know, we just do boomer stuff here. I don't do options. I don't do none of that. I just did leverage, oil, U, and ETF. Anybody could just open that up. You probably could do it in your 401k pretty easily too. If your 401k allows you to buy stocks, it might allow you to buy oil. It might not. If it doesn't, you could buy Gush. They might allow that because it's just 2x leverage of the XOP. So they might restrict you on some stocks, but so if your 401k doesn't let you do options, I think a lot of people's 401ks do not let you do that. And but they allow you to buy certain stocks and ETFs, then yeah, that's the way to do it. You just throw your thing in there, and yeah, some of them are generally restricted. Some brokers will restrict it too, because a lot of brokers now have started noticing that retail people are buying ETFs like that because they can't use options. So then they go back. This is a reason, you know, if you restrict people from doing options, then they're going to go to leverage ETFs to get the gains, right? I don't know what to say. You can't pretty much baby from not taking risk. They're going to find risk some way. And I know 401ks are heavily restricted. Like, you know, all my 401ks from my jobs, they only allow you to shuffle between certain mutual funds and sector things. They don't even, like, one of them allows me to do like stocks. Like, they'll allow me to pick a stock, but I haven't like fully taken advantage of that, because I honestly, my 401k, I treat it like long term. I'm not gonna really care about, like, okay, I can move between small cap value, small cap growth, international value, international growth, something like that. If you give me some level of control, I don't really care. Like, my other accounts, I can do the crazy shit on. I really don't mind. But a lot of you probably, you know, all your money is tied in 401ks because the rest of you don't have any side cash, right? Like, all the money that you get from your paycheck, you spend, and they force you to put it a percentage in 401ks, and they match it. You know, some of your companies might be very generous. They might give you 3 up to maybe 5. Maybe some of you guys who work in really good companies, they'll give you 10% matching on your 401k. So a lot of your money is probably tied in 401ks, and you can't do shit. Because if I told you to buy oil U and you couldn't do it, you missed out, right? That's really a problem, I think. You still buy in now? No. I think this is good enough. My target for 100% was over many months. I did not expect the Iran war. I don't really care if it happened or didn't happen. Since it happened and we're already here, it doesn't make sense for anybody to buy at the at probably the top. I think the best thing now is to short, okay, the tech sectors. So it's going to have a bounce. We're going to have a bounce, and then you just short it. I think that's the best thing to do. And then oil will return in favor, because it's, even if it doesn't go down, it's going sideways. You're missing out on a lot of money. We're going to go sideways for at least maybe 3 months now. In 3 months, you could be shorting, and then you would be making another additional 100% shorting, because I think we're going to have a huge crash after the boots are going to go on the ground. They're going to be a reflexive move. Oil could still go up, but the thing is like, it's not going to be as much as the stock market going down. Tech, there's going to be a big flush. If you time it right, you're going to get a big amount of money, okay, doing that instead. So that's the game plan, guys. That's it. Otherwise, just stay in cash. Just stay in cash, and we're going to buy the dips. So if you're not willing to short, then just stay put, stay in cash. Cash pays you 5% over the year. That's basically bonds, right? So cash, I assume you have an account that will give you 5% when you don't have it doing anything else, and that's it. What are the best ETFs? Yeah, we'll go over that. So yeah, so if you're not willing to short, then just hold up, because we are going to have a bounce. It's going to trick people. People are going to chase that, and that's when I'm going to short. So I don't know about SOX L versus SOX S. I think the software is going to be where everything's going to have the fun times. Okay, that's where the fun times are going to be. So okay, and watching very closely is mRNA. I was talking about Moderna. If you look at Moderna, this is a perfect picture here. This is a Wyckoff bottom, okay? So if you look at that, it's made a bottom. And this is over how many months now? So this is pretty much like nearly two years. So this is perfect picture right here. So I'm going to be watching this one because healthcare will be the next one up. When you go into a recession, healthcare is going to be this place to be, a healthcare sector. So I think this has a big chance of going up a lot from here. We're at $49. So yeah, we could see like $200 next, and then after 200, well, okay, I don't know if it's going to back up to 500, 600. That's COVID shit. COVID was a one-off. I don't know how good Moderna is that will go that high. Come on. So all right, so that's where we want to be. And there is a leverage ETF for Moderna. So that's a new leverage ETF, MRNX. Okay, MRNX. That's where we're going to be at. So all right, let me see. Oh man, yeah, I'm probably gonna have to get a new laptop. This memory stuff is just gonna be killing me with all this. Oh my god. Okay, all right. Blah 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 blah. Okay. All right, done with that. So, yeah, the other thing is that on Thursday, gold. So if you're trading, you do GDXD and GDXU. Okay, so let me see. So let's see. First thing up. Okay, so gonna be looking to buy mRNA or leverage mRNX. So that's what I'll be looking for when the market actually crashes. Okay, something like that. UwU. Then the next one will be, this thing will be a good trade, and maybe a short-term swing trade as well. So when the market is going up this week, I'll probably be in WEBL and 𝑓IBU. So that'll be the software and cloud leverage ETFs there. 3x for WEBL and 2x for 𝑓IBU, because they actually have a different mixture of stocks. I think if you combine the two, you'll get the most bang for your buck. So you can ride this up into from tomorrow morning into April Fools, or maybe even just before Good Friday, and I get out. I'm getting out. Okay, and then we'll decide how to short it from there. Okay, so there's a inverse ETS for those, but for now, I think there's going to be a bounce. That's really what's going to be. And then lastly, let's see. Yeah, GDXU will be the last one, like I said. So on Friday, it was up 15%. Trump did taco. He did taco, but most of the market gave it up before the market opened. So GDXU was actually still going up. And I think it's more because of the Japanese yield. All right. So it's weird. I think it's weird. But the market didn't believe in taco. Like the stock market, it just like by the time the market opened, everything pre-market and overnight market just went away. They just don't listen to Trump anymore, I guess. It just doesn't matter what Trump says. I think we're at the point where, Trump might have zero effect on the markets. The market's already sniffed out that Trump just says whatever the hell he wants to say, but it's nothing realistic. And if that's the case, then yeah, Iran has full control of the stock market right now. Trump tweets, the longer this goes, the less Trump tweets have any effect on the markets. And so all that matters is what Iran says. And Iran already came out. So Iran just basically said, don't listen to Trump. He's lying, blah, blah, blah. There's no talks. He's just manipulating the market. And this is what he said. So Iran's Speaker of the Parliament provides trading advice to investors trading U.S. markets. Pre-market so-called news or truth is often just a setup for profit taking. Basically, it is a reverse indicator. Do the opposite. If they pump it, short it. If they dump it, go long. See something tomorrow? You know the drill. Dude, Iran is already clowning the taco trade right now. So, like, whatever then, like the less and less the markets follow Trump, then it's all in Iran's control. Then Iran has full control of how and when we're going to taco, okay? And that's really going to affect how things work with the trade. All right, so let me show you this about gold and silver, because apparently the yield for the yen is more important. So let me put this is. Okay. All right. Here we go. Okay. So Samantha LeDuc basically uses the Japanese 10-year yield, but I modified it. Okay. I basically did 10-year yield minus US 10-year yield. So I compare the Japanese sovereign bonds versus the US Treasury bonds. Okay. And let's see how it looks compared to gold. Okay. So this is a weekly chart here. Let me add gold onto this thing. Okay. Look at that. Pretty well. So when 10-year yield minus the Japanese 10-year yield minus the US 10-year yield, gold follows it. So I could see right now that the 10-year yield of the Japanese bonds on Friday went up. So it kept it up. So I think that really influenced things. So even though the US 10-year yield went up, so the US bonds went down basically. So yield goes opposite of price of the bonds. So even though the US yield went up, you would think that's bad for gold and silver. But the Japanese yield went up more than the US yields. So gold still went up. So even though GDXU opened up, right? And it was basically flat at the open and it went down a bit, I think. So let's look at how GDXU went. Okay. So this was on Friday, right? So let's see, Friday. Okay, Thursday, Friday. So yeah, it was flat, kind of like barely opened up. And then it was goofing around for like over an hour before shooting up. So yeah, I think the Japanese yields now look like it's overtaking the US yields, and perhaps it doesn't matter if we taco. Perhaps GDXU is going to keep going up. So I wonder. So that's something I'll be watching on Monday. And definitely the whole week. I'm curious how gold and silver respond. We might be at the point where gold and silver really are just itching to get up. Like, it's hard for it to go down now if the Japanese 10-year yield is like where it is right now. So this is the Japanese 10-year yield. So yeah, we're back at the high. So if this yield, the Japanese yield, keeps moving up, then maybe gold and silver can ignore how strong the dollar is, because the yen is getting weaker, but it's not following that. So the other thing about silver is that Samantha Leduc mentioned is that it follows the Chinese currency, right? The yuan. So USD, CNY. It's been going sideways for the most part since, yeah, it hasn't been doing anything for March, but it hasn't been going down though. So the thing is, you want this to go down. So you want the dollar strength versus the Chinese yuan to keep going down. That means it's easy to prop up silver. But if this thing keeps going sideways, then yeah, it's really hard for silver to get anywhere. Okay. So that's why I've been saying it's going to go sideways. It really is. If it defends this level at $70 per troy ounce, then yeah, we could probably do a little bit of a move up, but then it'll just go back down. Then it goes back up, goes back down. For the rest of the year, it's going sideways. Okay, so you can trade GDXU, then go back to GDXD. GDXD is the bear ETF for the gold miners. And gold miners, I told you, like, they also, out of their products, when they mine gold, they get silver and copper also. So a lot of these gold miners are also silver miners and copper miners at the same time. And they all those three move together. Gold is more independent though, because gold, the main reason you buy gold is because you want to protect something, right? From inflation or other things. And I think I have something here. Turkish. Let's see. I have a tweet. Yeah, Turkey has sold a bunch of gold. I think because they had to buy oil. So yeah, that's a problem right now. So that, I think that explains some of your gold weakness, is that a lot of these banks that were hoarding gold are now using the gold for this purpose. They are using it to buy up oil or to get more dollars, because Turkey, yeah, has high inflation. So it's one of those countries that really need dollars in a cheap way, and they can't convert liras to dollars, right? So yeah, that explains it. So that's the use of gold. The use of gold is to protect yourself. There you go. Alrighty. Okay, let me see. Okay, let's get this tweet up here. Pump. Well, there'll be some kind of pump. Probably software will get pumped up temporarily for a few days. Yeah, that's what's gonna pump. Gold might pump with it, sure, but that's it. Then I'm shorting again. So by Good Friday, I'll be shorting again. That's it. That's my plan. Okay, so see this thing here. Okay. Okay. So, Turkey sold 58 tons of gold worth over $8 billion in just 2 weeks. Gold reserves dropped 6 tons in the week ending March 13th and another 52 tons in the week ending March 20th, bringing total reserves down to 513 tons, making the largest drop in 7 years. Over half of the gold was used to borrow US dollars via swaps. Oh, there we go. Dollar milkshake theory. You need to get dollars, with the rest sold outright on the open market. The gold sales also exceeded the 43 tons of outflows from all global gold-backed ETFs over the same 2-week period. Oh my God. God damn. So yeah, that pretty much swamps any paper trading, making Turkey the single largest source of gold liquidation worldwide. This comes as the central bank is burning its FX reserves to defend the lira. Oh my God, what is it doing? Yeah, there we go. It's trying to make sure the lira doesn't collapse, which has come under intense pressure from surging energy import costs and rising U.S. dollar demand since the Iran war began. As a result, total Turkey FX reserves dropped $40 billion to $175 billion, the lowest since Q3 of 2025. Rising energy costs are forcing Turkey to dump gold. There you go. Gold is useless. It's just a yellow rock, dude. I can't turn it into energy, right? So I gotta dump it to get my energy. I gotta dump it to support my other currency. That's basically it. So, yeah, I just trade gold. Do I believe that gold is useful for the apocalypse? I don't know. Maybe if the Carrington event and all that, and people go back into a bartering system or something. Sure, but I think we're gonna have a lot more problems than just worrying about if I have a gold Liberty coin or some shit. Come on, man. Get real, guys. Okay. Anything else? What else? Nope. I don't think I care about that. Okay, so there was 2 stories about Oracle right here. So let's see these tweets right now. Oracle's 5-year credit default swaps, so the CDS, surged to 198.18 basis points on Friday, the highest closing level ever, officially surpassing the 2008 financial crisis peak. The cost of insuring against Oracle's default has quadrupled since mid-2025. This comes as Oracle has become the most popular insurer to hedge or bet against AI-related debt. With $120 billion of bonds in the Bloomberg U.S. High Grade Corporate Bond Index, the largest non-bank issuer. Oracle has also the most liquid investment-grade CDS, with average weekly trades topping $830 million. Okay. Well, there you go. There you go, guys. So, yeah, there's a lot of echoes of 2008. So maybe I should buy GDX. I don't know. The pump could be very massive. I got to warn you, because like I already showed you the yen. I mean, not the yen, the Japanese bonds. So if Japanese bonds are actually going down faster than US bonds, then gold might just still go up no matter what it does. So there might be no trade there anymore. The taco trade will be in software, because software broke a lot of resistances and everything. So yeah, you got to go back to the beginning of the show. I showed some leverage ETFs for software. That's what I'm going to be looking at in the morning. I'm really not sure about gold anymore, because the way it moved on Friday, it didn't follow the market. So that tells me that gold may not care about taco or not taco, Iran or not Iran anymore. It might be moving on other reasons based on Japan's move. Okay, Oracle's 5-year credit default swap. You see that? So that is as high as the great financial crisis right there. Boom. So we got a lot of stuff saying that we shall be crashing. Okay. So I think, next year does look primed to have a crash. And you can see the same thing on this tweet. All right. Right here. Okay. So JP Morgan is now offering a basket of CDS. I think someone in chat mentioned this. Somebody's going to, they're private equity or whatever they're allowing to short private equity. Now JP Morgan is allowing you to have CDS with Google, Amazon, Meta, Microsoft, Oracle together. So you can use that to short against AI. So there's another vehicle to short against AI right here. So there you go. Okay. All right. So I think, yeah, you're going to have a lot of problems. I mean, I don't know. And the stripper said they're going to have boots on the ground. So I don't know when, though. Polymarket says it'll be at April 30th before April Fool's Day. Dude, anytime somebody makes an ETF of something, that's when to short. If you look at Bitcoin and Ethereum, every time they made an ETF of Bitcoin or Ethereum, the price went down because basically you allow Ethereum and Bitcoin to lockstep with the open market. So you see when NASDAQ goes up and down, it follows it at the same time. It's because now the ETFs drive the crypto. The amount of liquidity from ETFs is much larger than Coinbase plus Binance plus whatever right now. Because a lot of people are restricted from buying Bitcoin and Ethereum directly, but they want exposure to crypto. So the only way they get exposure is through ETFs. Like at the beginning of the stream, I was talking about people with 401ks. Like you're restricted from doing crazy shit, right? But some of them allow you to buy some tickers. Maybe some of them allow you to buy leverage tickers. So that's why I talk about the leverage ETFs, because some people, if they want to have leverage, they can't do it with 401ks like usually. And they want exposure to crypto. They can't do it usually. So ETFs allow boomers to get exposure in their boomer accounts to crypto, because they're not allowed to have access to crypto because of such and such restrictions, right? They don't want these guys to lose all their money. Okay, that's bad for business. So yeah, so that's why ETFs are not a good thing in general for crypto, because then you allow the boomer crowd, the normies, to get in, and that affects things. So usually, if you time it, you watch it. When Bitcoin got futures market, when Ethereum got futures market, the price went down. When Bitcoin and Ethereum got ETFs, it went down. So usually, yeah, whenever they allow people to have those things, it goes down, because you allow it to open up the market to more people that did not have access to that market before, and then everything goes crazy. Yeah, because people are going. The liquidity out there overdrives anything inside your normal market. Okay, all right, okay. I'm sure there's memes of it. You can go on Twitter. You probably can look it up. Like people just make jokes about every time such and such makes an ETF or allows futures market. Yeah, crypto goes down. Okay. All right. I think that's it. I don't know. What else was I going to talk about? Let me remind you about the whole market thing, my prediction. Okay, let me just do that first, and then we'll move on to read the articles. Okay, and then we can close out the stream. So this is just a little update. Okay, the rest of it on Friday. Whatever leftover SOXS I had, I got out. I'm done. So right now we're gonna go long. Okay, yeah, pretty much it. We're gonna go long on software. I think software has been beaten up too much here. People are having too easy of a time shorting that area of the NASDAQ. I think they're going to get burnt out eventually this week. So this week will be a little bit of a break, and then we'll short again by Thursday. I think that's what I'm going to do. Very simple move. Okay, that's it. I think everybody kind of agrees, unless we get boots on the ground on April Fools or something like that, which is where Polymarket is trying to bet. yeah, they're deploying. So the stripper video I played at the beginning. Ugh, the stripper indicator. That's not good. Okay, so this is what I drew. So this first gray line here I drew in the beginning of the year. I said it's probably going to do this. Okay. So let me zoom in here. I do that. So it looks like it's following it. So I said it's going to go down to 5,500 about in the S&P 500, go up to 8,000, I guess, and then it's going to go crash sometime in 2027. So dump, big pump, trap everyone, and then the final crash where we get into a recession. Okay? That was the plan. Since we are going down like this pretty easily, very orderly, we haven't had a big old flush crash. After the JP Morgan collar stuff disappears, then we will have a bounce, and then we will go down. Okay, so this week will be a little recovery, I think, and that will trap people. And then once the trap is set, then we can finally puke. All right. I have no idea if it's just going to be 2 days, 3 days, or the whole week. And it's Good Friday is closed. The market is closed on Good Friday. You know, it could be like, whoa, shit, everything goes to hell on Easter, and then Monday is Black Monday. I don't know. But I think we got to go up a little bit because it's way oversold. Okay, on technicals, and yeah, it's just way oversold right here. And it makes sense that once we go from the third quarter into March into April, we will see something happen because the JP Morgan collars will be adjusted to new levels, and then we'll get it there. All right. And if you look at it like IGV, look at IGV. So this is IGV. Look at the daily chart. Look at that. Bro, it just went back up, right? It tried to recover February into March. Then it just dumped. It just kept dumping. Okay. There's no more earnings, right? There's no more earnings. Oracle was the last earning. And now we are at the same low that we were back in April for a lot of these software companies, cloud companies. If you look at FDN, communications, you know, Meta and all that, it still has a ways to go before it hits at April levels. But this looks pretty bad. It's lower than where we were back in February. So it looks like it's ready to keep going down. But I think that's a trap. I think it's going to make a little attempt at recovering. Okay. And this other ETF, Sky, another one to look at. No, not Sky. T, Sky, Y. Same thing here. You see that? Okay. So a lot of these look very bad. Very bad. And I think people are expecting to short it on Monday, right? And I think that's a bad move. You're too late. You should have been shorting it back in October, November, or even December, or even January. Like, I don't understand this whole thing where like, oh yeah, look at the chart. This is easy. It makes sense. It's going to puke. Yeah, it's going to puke. But because all of you guys are trying to short now, it's not going to puke. So this is the problem, because when everybody agrees with you, I can no longer agree with you. Okay? This is why you have to be a contrarian. If everybody agreed with me and said oil was the play to make in January, February, I wouldn't have done it. But because people were saying like, oh, JP Morgan says oil ain't going to get above $60 a barrel. That was the Friday before the whole Iran stuff started happening over the weekend. JP Morgan said, our predictions for the rest of the year is $60 oil. Wrong. We're now at $100 a barrel, right? 90, 100, 120. So if you agree with me, I don't like it. So now everybody's agreeing with me. I don't like it. So yeah, no shit. Software is bad. That's why I was hiding out in semiconductors. Everybody's still too. This also makes me kind of nervous. I'm just like, what the hell? Like semiconductors is still up here. It's barely even gotten to these lows back in the early March. So what? Man, this is so bad. Yeah, everyone's like running around trying to hide. And I think Friday kind of showed that people gave up and they went into oil because there wasn't really too good of a reason for oil companies to keep going up. I think it went up because they had no choice. Like they were selling their software, they were selling some semiconductors, and they had to put money somewhere else because a lot of portfolios, they don't allow certain big investors. Okay, so this is institutional buying. They restrict how much cash you have. So if you sell a stock, they won't allow you to keep it in cash even. Like they'll say like, bro, you sold too much. It's in cash. Okay, it's in T-bills, but we shouldn't have that many. You got to put it back into the stock market. The only thing you can put it back in is where? Oil. Because oil is the only thing working right now. So you understand the market is kind of like you have more freedom than a lot of people in big banks, a lot of people with 401ks even. So if you have your own personal account, you can move around between oil and tech, software, leverage, not leverage. But a lot of big institutions, they're restricted in what they can do. So not only 401ks probably can't do options, only a few maybe accounts are allowed to. Many institutions aren't allowed to hold so much cash. So you could see like it forces the institutions to buy the dip. What dip? There is no dip. If you think the market is going down, where do I put it? I'm going to follow oil because I have no choice. So that also affects the dynamics, you see? So even if they didn't want to buy oil companies at such a high price compared to 2 months ago, they got no choice because they can't leave it all in cash. They have to keep it at a certain percentage. So that helps you as a trader because you know that and you keep following the oil you up, right? So that's why we got up to 100% pretty quickly. And it's just like, okay, well, now I can sell because now I can go into software. But you can't because you sold software on Friday and you followed UwU, which was a big mistake because so you get it now? You have a lot more freedom than you think. You think the big guys like have insider information. Not every big guy does. There's a lot of big guys that will act like morons too because their hands are tied. And if you know those things, yeah, you can one up them. Okay, not everybody's gonna be like some George Soros here. All right, so there you go. All right, I think that's a good segue or digression, if you want to put it that. Because yeah, it reminded me of that key fact that a lot of institutions, they are forced to have stocks. They're not allowed to have a larger percentage. I don't know what the restrictions are. Maybe 10% cash maximum of their whole portfolios. I don't know, something like that. If someone here works in investment banking, yeah, they could tell you. I never worked there. I don't know. So, oh, what's up, Latino? We're Trump. Okay, so time to read some articles. Then let's go. Shoot. Let's see. All right, let's go there. Get that tab open. Get some background music, and then we can continue. And then I'll sum it up. Close it out. Okay, it's probably 1 hour and 30 minutes for the whole show. All right. Oh, are there any other tweets I need to talk about? No, I don't think so. Let's see. Talk about Oracle. I think that's the most important one. There was one with the software stuff though. Let me see if I can find it. Damn. So many things. Okay, let me do this tweet. I think this was important. A lot of people are trying to figure out why software went down on Friday. Like this guy tweeted this. I'm not sure if this is the reason. I mean, that's the problem with news. It's like either the news caused the event or there was an event and they try to make up some news to explain why it happened. I kind of feel like this is the latter than the former. Like they saw software go down a lot on Friday, and I think it just went down because, you know, it's just like people. It's end of the quarter, like I said. It's just they're rebalancing everything for the next quarter. Every quarter they rebalance the portfolio, and there's only 2 more trading days of the first quarter. So tomorrow and Tuesday before April Fool's Day on Wednesday. So I just feel like that was the reason. There doesn't have to be a real reason why they sold software. And so this guy was saying like, oh, Anthropic accidentally leaked its next AI model and it just wiped out $14.5 billion from cybersecurity stocks in a single day. Claude Mythos was accidentally stored in a public accessible data cache and discovered before Anthropic could announce it. The model showed dramatically higher scores on cybersecurity tests, meaning AI can now detect and respond to threats at a level that traditionally required entire teams of security professionals and expensive enterprise software. Okay, so AI is going to replace your Norton. What is it? Norton antivirus? What do you guys use? I don't even use any antivirus. Like, what the fuck? Anyway, investors immediately started pricing in the question nobody in the industry wants to answer. If an AI model can do this, why does anyone need CrowdStrike? And the market answered immediately. CrowdStrike down 5.85%. Palo Alto Networks down 6.43%. Zscaler down 5.89%. Tenable down 9.7%. I don't know, man. I just feel like this tweet is just making up something after the fact, and it's trying to explain it. But I did see this article, so maybe this makes more sense. But even then, this was released 2 days before Friday. So if there was any reason to crash, why didn't it crash then? So I'll read this. But first, here we go. Oh, damn. They took away that tweet. Hold on. Let me see. Okay. There was accidentally the at the end of that link. Okay, let's see. Come on. Elon Musk doesn't censor people, do they? Oh, what's this? IDF is now wearing the Mosaic flag patches on their uniform. This flag represents the arrival of their messiah. The IDF is the army of Al-Dajjal, Antichrist. All right. Disclaimer, I love small hats. I'm not anti-Semitic. Please don't strike my channel, YouTube. Please. Okay, anyway. Yeah, so I guess they're wearing that. I don't know if that means anything. Any of you guys know about the end times? I don't know. Whatever. If we're going to the end times, can you please tell me this stuff? How much is Anthropic worth? The entire... see, Anthropic is going to have IPO. I kind of wonder if that tweet is just to hype up the Anthropic IPO. So Anthropic, what else? What else is going to have IPOs? SpaceX is going to have IPO. SpaceX wants to do IPO. Anthropic, what else? What other companies want to do IPO? I know there's another one. So what are the big IPOs? Big IPOs planned for 2026. Let's see. OpenAI wants to do IPO. Okay. So those three. If it's those three, then it makes a lot of sense because usually when you have huge IPOs, it comes before the big crash too. So a lot of people, when they want to hurry up and rush an IPO, it's because they know the market is going to go become shit. Oh my God, what is that? Amber alert. Somebody's giving me an Amber alert right here. All right, let's see. All right, yeah, some Amber alert. Okay. All right, yeah, there's an Amber alert. Oh, okay, great. Anyhow, anybody lose a kid? I don't know. What the fuck is going on? All right. Okay. So, yeah, I think when you see a lot of people rushing to get IPOs out, because I know Anthropic, OpenAI, and SpaceX have been just running, trying to get the hell out of there. That means that's another sign that the market top is coming. Okay, so when you have a lot of IPOs hyped up and they want to exit because the insiders want to get out. That's the reason you IPO. The insiders want to get out. So you got the IPOs. We have high inflation coming next year. So food inflation is coming along with fuel inflation. Fuel inflation is the first step. Food inflation is next. Unemployment is probably going to rise as well. We're seeing a lot of data showing unemployment is likely to keep going up into next year. So all these mean bad. So if we have a stagflation event, that's doubly bad because that means the Fed has no control of trying to stop it. So the next recession could be really terrible because it's a stagflation type of deal. When you had the 2008, it was easy because the balloon popped and they could just inject money with quantitative easing. This time around, since we have the Iran stuff, China, deglobalization, nearshoring, plus now food, because the food requires the fertilizer. That thing started happening because of the Ukraine. Ukraine was a big supplier of cheap precursors to make fertilizer, like I forgot what it was, nitrate, some other stuff too. And so, yeah, so all this stuff combined together means that the central banks can't do anything. All they can do is keep the rates high or raise the rates, which means that unemployment will get even worse. So then you'll have a situation like the 70s. So you guys are going to actually live through the 70s. So I know a lot of you guys are not old enough. I was born just after the 70s, the stagflation stuff. My parents lived through that, right? So you can talk to some boomers. They could tell you how the 70s were. High gas prices. Everything was expensive. You couldn't buy a house because interest rates were very high. But housing prices in the 70s was at least cheap. Even if interest rates was 15%, housing was still pretty affordable. It was just like $30,000. I could get a decent 2-bedroom place. Guess what? Now you're going to have like 8%, 9%, 10% interest for mortgage. And the housing is still probably going to be like, what, $300,000 for a shit box in an urban center? So even if that $500,000 shit box in an urban environment goes down to $300,000, would you consider that a good deal when you have to pay 9, 8, 9, 10, 11% for interest on your mortgage? That's still not a good deal, especially if you're unemployed. So I think you're going to actually have a worse time than the boomers in the 70s. So thank you very much, guys. Thank you very much. The boomers got everything and they got out. So everybody else, you're screwed. Sorry. So that's why I'm doing my show. I'm doing my show because I'm telling you, you got to find another way to make money. Even if you're unemployed, you can at least trade, right? You can trade gold, silver, oil. It doesn't matter if tech goes up and down. You could trade anything, Bitcoin, whatever. Something goes up, something goes down. You can short it, you can long it. You can make money in any environment. And this is the beauty of being an investor and trader in that time, because you don't care what the economy is doing. There's always a market to play, either short and long. So it doesn't matter if it goes up and down. If you can go both directions, you're a winner. So that's the whole point. All right. So what's up, media? Hits Maxer. What's up? Pal got pissed when someone asked a question and you stagflation said, yeah, I know they're pissed. They don't want to hear that. But it's true. It's coming. Sorry, guys. Central banks are screwed. Politicians are screwed. There's nothing you can do once this starts rolling. And yeah, I mean, a lot of people have been saying stagflation for a long time. I know it's overused, and a lot of doomers like to use it, but given all the conditions right now, it's kind of hard to ignore that prognostication. I think it's happening. I don't see a way out unless there's a miracle and they find oil, free oil gushing somewhere that's not owned by any country and everybody can access it. But as long as countries keep fighting for resources, and labor markets are now requiring to pay more, because you have to understand, China is no longer the factory of the world. They moved on to Malaysia, Vietnam, and Indonesia, and Bangladesh, right? But that can't hold out too long, you know. A lot of Mexico, yeah. That's why I like some emerging markets. Brazil, Mexico is very good for that reason. But if we have high oil prices and natural gas prices, Mexico will benefit though, because Mexico gets its energy from us through natural gas. That's why it's really important to support natural gas. A lot of pipelines go from us into Mexico to run their factories, maquiladoras, right? Something like that. The border towns where they have a lot of factories and they just easily ship any finished goods across the border. So that's really something that has to be preserved. Otherwise, you're really reliant on Asian countries, and if there's a war in Asia, guess what? Those shipping lanes are going to get constrained again. It's going to be Strait of Hormuz all over again. Oh shit! You need to ship some chips from Taiwan. There's a war out there. We can't ship anything because nobody wants to pay the insurance to row your boat across like the Taiwan Straits, right? So there you go. Fuck, man. Man, this world's crazy. I don't got time for this. Anyhow, any other tweets? No, I don't think so. Okay. I don't think so. All right, good. Let's do this. Let's do a Google search here. So if you guys like fundamentals, when you actually have to value a software company, what do? So here we do. I asked Google this: software company valuations based on sales of CrowdStrike compared to peers. So when you look at software companies, what you do is that you look at the price to sales. Okay, this is what a fundamental guy would do. Price to sales, not price to earnings, price to sales, the growth of the sales. Okay, and what else do they look at? I think they pretty much look at that. I don't know. Okay, so this is what it gives me. So compared to Palo Alto Networks, trades at a much lower multiple. So Palo Alto Networks is 11.3 enterprise value to revenue. So, okay, is that the other way to look at it? I don't know. I'm not a fundamentals guy. Largely because it is more mature business with slower growth, 14 to 22% range, compared to CrowdStrike, 23% revenue expansion. Fortinet, that's another cybersecurity company. Okay, trades at lower multiple at 20.2x. EV to EBITDA. Oh my god, what the heck? All right. Come on, AI. Don't give me all that. That's too complex for people. How about this? Okay. Software company valuations based on sales. How do I do this? So software company valuations based on sales revenue typically range from 3x to 8x annual recurring revenue. So I think that means like when you have a subscription service, you kind of get that growth that way. Okay, so with high growth software as a service firms, over 50% growth, commanding top tier multiples, while mature or slower growth companies often trade at 2 to 5x. Valuations are heavily driven by revenue growth, profitability, rule of 40, and retention rates. Okay. Okay. So now, based on that, and based on sales, now compare the top software companies like Oracle, Microsoft, Google, Netflix, or not Netflix, Meta. How about this? And what else? You got CrowdStrike. What other ones we got here? There's other ones. What's another good one? CrowdStrike. CrowdStrike's pretty big. I don't know. Net. Okay. How about Net? Okay, CrowdStrike, Cloudflare. Let's see. Okay, as of March 2026, software company valuations have undergone a significant correction, with the industry trading at or below the S&P 500. Yeah, no shit, we know that. The sector is prioritizing efficiency and AI-driven profitability, with AI-native products commanding 20 to 50% premium. Okay, but like, give me a comparison here. Man, do I have to use Grok? Oh my god. Bruh, do I have to use Grok? I might have to use Grok. All right, let me see Grok. What does it say? All right, Grok. Yeah, see, this is why I don't do fundamentals. I just rather look at a chart. So this is a waste of my time. Like then I have to like dig around and understand how they make. God damn, that's too much work, bro. The market already knows this, so it should tell me what it thinks. So, okay, let's see. Okay, this is better. Okay, so let's see. Software companies are valued using revenue multiples, price to sale. Yep, that's right. I know that. EV to sale. So, okay, EV to revenue. All right, we saw that in the Google response. As many particularly high growth SaaS, okay, software as a service or infrastructure firms, prioritize a top line expansion over near-term profitability. These multiples reflect growth rates, margins, market position, and investor expectations around scalability and AI cloud tailwinds. Mature big tech software giants with high profitability and diversified revenue trade at lower multiples, tip 11 times. All right, keep that in mind. While high growth cybersecurity infrastructure plays command premiums 20x. Okay, gotcha. So some of the big boys here probably are going to be 20x, right? Let's see. All right, so we got Oracle, Microsoft, Google, Meta, CrowdStrike, and Cloudflare. All right, I just randomly picked them. Okay, trailing PS right here, price to sales 6.8x. 8.1x. So, I mean, it looks like it's fairly priced. CrowdStrike is crazy, right? 19, which is what we expect. We said, like, okay, they will command premiums of cybersecurity and stuff like that. Okay, so nothing wrong I see here. So what's wrong with Oracle then? What's wrong with that? Okay, because Oracle is the one that people are bagging on. So I'm like, what? Okay, so it doesn't look like from the fundamentals it looks bad. It's only the bond market that's sniffing this stuff out. This is why, like, I kind of wonder, it's like, okay, the bond market should be smarter than the stock market. Stock market guys would just be looking at this and think like nothing's wrong, right? 6.8x, 8.1x, that's pretty much on par with the Google, Microsoft. What's the big deal? And Facebook, Instagram, what's the big deal? Why is it? So the bond market sees something, right? It sees something bad. It just says like blah blah blah. Because Palantir is like 100. That's why like 2 years ago everybody was like, Palantir, ooh, that's a meme stock. Yeah, I get it. It's a meme stock. But if I was you and just said like Palantir, if I was a fundamental guy, I look at Palantir, I would never buy it. Palantir is overpriced then. It's overpriced now, way overpriced. So if I look at these metrics, price to sales, all this stuff, I would never buy Palantir, but I miss out on 10x. Palantir went from $20 to nearly 200, right, within a year. So if I look at fundamentals, I missed out. The market doesn't care about fundamentals, honestly. Like, yeah, over time it might, but when you actually have hype, a bubble, reflexivity takes into account, and that's why if you just looked at this, I would never have bought Palantir. Okay, but looking at a chart, I bought Palantir. So that's kind of like how it goes. And now all the bond market is saying Oracle is gonna be the one that destroys all of AI, or what will be the kind of like the canary in the coal mine. If Oracle fails, everybody else fails. But like if I looked at this, there's nothing wrong. Oracle's not as crazy as these other guys like CrowdStrike, and so based on just these raw numbers, what does it tell me? Nothing. Shoot, I don't know. I'm not getting anything, honestly. I'm trying out another AI over here. I don't see nothing. Okay. Let me re-ask it a different way. Is Oracle overvalued? Okay, I don't know. Compared to peers. I don't think it's going to tell me. Yeah, but it's not overvalued compared to Microsoft, though. So what's the point? Okay, it says it's overvalued, but it's like the mean. But oh my god. Shoot. Okay, yeah. So this is why I don't do fundamentals. I don't think you get anything from the public information sources like this. The bond market sees something, right? It thinks like it can't pay its debt, so now it's shorting Oracle's bonds, and it's doing it again. So it did it last year. It's doing it again this year. I don't like that. Does that mean this is what I should be keeping an eye on if I want to see if the market will crash? I don't know. But based on fundamental metrics, it's fine. Like, yeah, it's more. Okay, here. See, I'll show you what I did. So I went back to Google and did this. Okay, look. So I asked Google again, software company valuations based on sales. Is Oracle overvalued compared to peers? And then it gives me this. Okay. Okay, so what the fuck? It gave me a different answer from here. Interesting. Yeah, it's giving me a different answer each time now. All right. Okay, let me screenshot this. Let me screenshot this for you, and then I'll show you. Oh my god. Yeah, I can't trust this AIs then. Like, if it's gonna give me a different answer each time, what's the point? Okay, let me screenshot the first time I asked this question, what it gave me. Okay, because yeah, if you have AI, it's good, because then you can do fundamentals, because then you could keep asking AI, okay, is this thing overvalued, undervalued based on peers, and then you're gonna have to trust that the AI isn't gonna give you BS, which is very hard for me to fully believe. But at least for an initial examination of companies, I would think it wouldn't be so far off. It would actually tell me like, hey bro, okay, compare it to these other guys. You can give me that at least correctly or semi-decently, right? I don't know. So all right, so let me show you what it gave here. Okay, so you remember this. So then remember this. This is what it gives me now. All right. So it kind of is the same answer as before, but here it gave it to me in a different form over here. All right. As of late March 2026, Oracle is considered overvalued based on its price to sales ratio and other valuation metrics compared to its software peers. Of course, if we just look at Microsoft, Alphabet, Meta, it's not that bad, right? It's pretty much in line. But compared to everyone else, yeah, it's bad. But then the bond market is targeting Oracle specifically. So it says if Oracle is the one that's really gonna, if any of these guys are going to fail, it's going to be Oracle first. That's what it's saying. right? But I don't see it here, right? I don't see a big difference between this and this and this and these numbers here. There's not a big difference. Okay, so we classify as ultra expensive. Well, if I did the same with Microsoft, Alphabet, and Meta, it's probably going to say ultra expensive too. What's the difference? So as of March 27, Oracle has a price to sales ratio of approximately 6.18, which is over 123% higher than the software industry median of 2.77. Okay, so it has a value grade of F. Okay, yeah. So I guess this last point is why the bond market doesn't like it. It has negative free cash flow. Unlike peers like Microsoft or Alphabet, Oracle has experienced significantly negative free cash flow due to massive spending on data centers. Yeah, I read that. Okay, so that's the difference. Okay, so the bond market really doesn't like that for now. So yeah. Yeah, that's what the thing with Oracle. I don't get Oracle. You know, I got my parents to buy Oracle with Apple back in the 90s, right? And Oracle bought Sun Microsystems. Do you guys remember Sun Microsystems? Sun Microsystems made Java. So they were moving into hardware. And then my friend, when I graduated, my friend worked for Oracle for a little while and to design CPUs for, what was it? Spark? Was it the Spark? Did they call it Spark, right? SPARC? Was that Spark? I don't know. So when they bought Sun Microsystems, it was Spark, right? Yeah. So Oracle was trying to get Spark working. So I guess that failed and he left. I don't know. I didn't keep track of that. So whatever. So yeah, they're still doing it, where now they want to do data centers for the cloud and AI. I don't know. So yeah, Java was a fail. Yeah, I learned Java in high school, never used it since. It was a fun language, but I didn't particularly find it very useful compared to any other language. I learned Python and C at the same time. This was back in the 90s. So Python was a toy. Java was kind of like all the rage. Everyone was like, Java's next. Java's next. And then after a while, Java died. It was like, I never heard no Java no more. Who the hell uses Java? Shit, I still use C and C++ more than that. Now they already moved on to C#, and Apple went on to Objective-C. What the hell is they use Swift? But yeah, I'm not a programmer though, so I don't follow it that well. Okay, I'm a hardware guy, so I don't know too much about it. I just use C and scripting languages, right? Like Perl. Anybody you guys know Perl? Maybe one day we should go into the history of Perl. Perl was made by a missionary to help him translate the Bible. Perl is really interesting history. Nobody uses Perl either. Perl is a fun language though, because like if you told someone to write the shortest Perl line to do the most shit, that's a competition. But nobody could understand what that thing does, right? Once you make one line of Perl, you look at it, you're like, what? That one line of Perl does all that? And you just look at it, you're like, I don't know what it does, bro. So that's the fun thing about Perl. Perl is crazy. But I think that's just for autists or like that want to do it. Yeah, Python's good. I think Python is overall good general language, you know. And nowadays, like before, the complaint about Python is like, oh, it's interpretive language, it's slow. Bro, now you got like all these pre-compiled libraries and stuff, and there's so much like code out there. It's kind of like, and computers are not slow like they were before, so it's like it's not fast enough. It's like for most people it's good enough, like honestly, like, and it's free. So like, because there's so much free, like you could do a lot of the like MATLAB, they made you pay, or a lot of the scientific tools they made you pay, and you just get like SciPy, and then you could just do the same shit on Python. Come on, you can't beat free, man. Anyhow, industrial IT point of view. Oh, okay, interesting. Oh, Java's huge in enterprise. Oh, I see. It's kind of like COBOL. Any of you guys know COBOL? COBOL is huge in government. They still use COBOL there. And then if you do hardware design in government, they make you do VHDL. But everybody else uses Verilog. Because Verilog, you can use System C. System C, you can design test benches for your hardware. But the government, if you work in the military, I think they still use VHDL, which barely anybody freaking knows how to do anymore. So yeah, there's some weird pockets, right? There's some weird pockets of places where they still use. And Fortran, there's a lot of old code. Nobody's going to change that. So if you use a lot of matrix linear algebra stuff, they'll still use Fortran. So they're not going to use SciPy. Come on, they're not going to force you to use SciPy. They'll be like, oh yeah, just convert all that into Python for us. Nope. Sorry, we're still using Fortran. So the government is always 30 years behind. Yeah. DMV uses COBOL, I think, to issue your license and your and all that. Yeah. No. Yeah, I know you weren't promoting it. I just found it interesting that there's still pockets out there that have stuff. So I'm sure there are people that still use those things, but I haven't come across it, honestly. I haven't come across anybody anymore. So that's all. That's just digression right there. Okay. Yeah, we're done there. That's good. Okay. I was supposed to read an article, wasn't I? Shoot. Damn, I thought I had some video I wanted to show. Let me see if I can download it while we're looking at this. Crap, man. Hold on, guys. Oh man, there was a video. There was a pretty good video too. Shoot. Because last week I was talking about that JP Morgan caller. Crap. Where is it? I gotta find the link. Damn. I got sidetracked by that whole Boyd stream, man. Yeah, you guys should check out the Boyd stream. It was pretty popular. It's my highest viewed stream now. I guess people just love the dang the drama. They can't get enough of that. They gotta eat that slop up. Delicious. Yum. Oh man, where is it? Crap. Oh, there was this other talk too. Oh man, maybe I gotta save it for another time. Shoot. I don't know. I think I want to talk about it. I think it's good to talk about it now before the week starts, you know? Let's see. Let's see if I got enough time to even get all this stuff. Okay, first up, let's see, get this. Okay, let's see. I'm gonna load it up, see what happens. And then the second video. Let's see, I gotta get there. Gotta see if it's like in the history. I'm sure it's in the history. Yeah, I know you know your drama. No, this was this morning. On YouTube. Did you see the Boyd stream? I went over Hurricane Paro and some John Galt lore. Because was had that competition, right, with the brackets, and then he put freaking John Galt versus Hurricane Paro. I thought that was like really messed up. I was like, dude, if you don't have the clips on point, it's really unfair to have Hurricane Paro versus John Galt. So does Mark Cuban have his own like collar? I don't know. I didn't know that. I didn't know that at all. Okay. Anyhow, let me see. Okay, we got a history here. Okay. Junk. How far along do I have to go to find it? Oh man, this is so painful. And this is the drawback of being disorganized, being a messy person. Yeah, once you leave work, you don't have to be as organized as you once were. Now you're just so used to just not giving a shit. Where'd I put that link, man? I put a link somewhere. What the fuck? Bro. Come on, I gotta go through all my history to find this. Oh, here we are. I hate how they title streams now. Everything is clickbait. Everything is clickbait. So the titles aren't even what they are gonna talk about. It's just made to scare you to click the damn thing. It's just like, can you guys stop doing that? Because it makes it hard to search for it. Now I have to like rename it in my own way to go like, oh, you're gonna talk about this in this stream now, aren't you? Okay. Fucking shit. Stupid clickbait titles, man. Pisses me off. All right, let's see if we can download it. All right, it'll take a while. This one. How about this one? Okay. All right. Okay. Okay, well, that's running in the background. Good, good, good. Yeah, I'm a messy Asian, honestly. I mean, that's why I'm a weirdo, I think. I think my mind is pretty scattered. Not very disciplined. So I'm very free-flowing. So, yeah. Probably why I'm just like, yeah, I'm an outlier, I think. I'm too much of an outlier. All right, let's see. Okay. Let me get back this. That's why I need a producer. I need someone organized. Help me out. Producer. I was hoping this AI stuff would help me, but maybe it won't. I think it's just making me more disorganized because I could just be like, oh, okay, let me ask AI that. Let's see what it gives me. They'll just look it up. Okay, back to the show while that thing's downloading. All right. Okay, let's read. Okay, we read that. That's fine. Now I'm going to pop, and put this up. So if you remember from Thursday, I have the deadlines for all the missiles. Okay. So the first one are the Arrow 2, Arrow 3 missiles. This has already been depleted, but I think they rationed it so they can go a little bit longer. So they're not using their fancy Arrow 2, Arrow 3s. What happens is they're going to use weaker and weaker defenses. And I think more of the Iranian missiles are going to get through now. Okay, so you can see this one. You have the THAAD, and that's the Gulf states. That will be depleted in April 3rd. Blue Sparrow is an offensive one. Let's ignore that. We'll look at defensive. They're using more of this David's Sling. So David's Sling is being used more, and that gets depleted in April 6th, roughly. Let's see. And then the next one will be the THAADs. That will be April 11th. The THAADs are gone. And then the U.S. THAADs will be gone April 17th. So now you know the deadlines. Yeah, you'll know the deadlines, and you kind of can tell why they're getting more and more anxious to end this. Because once they get through Iran, I mean, I don't see why Iran should give up as long as they can keep making more than they're losing. If they can keep up with the drone manufacturing, for sure, they can just keep fucking shit up. All right. So this is the news. Israel scales back missile interceptors as Iran barrages persist. Okay. So Israel has begun limiting its use of its most advanced missile interceptors as ongoing Iranian barrages strain stockpiles, forcing the military to increasingly rely on upgraded but less capable systems. Boom, 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 Wall Street Journal said on Friday. So they kept denying it. They kept denying this report that said like when the deadlines were. This thing was made by a think tank in the UK. The RUSI, I think Duke of Wellington created this think tank. This think tank is the oldest think tank in the world. So they kept denying it, but I guess it was true because they were doing this now. The shift comes as the war enters its fourth week, with Iran continuing near daily launches of ballistic missiles and drones. In recent days, 2 Iranian missiles struck the southern cities of Dimona and Arad after interceptor attempts using modified lower-tier systems failed. So it's going to be how it's going to be. Iran could just keep saying, nah, we're not going to talk to you no more. I mean, I don't think, why should they? Talking just means they're stalling for time, right? To put in replacement missiles and moving systems from South Korea over there and shit. Like, why would you stop? Keep doing it. Like, you showed your hand already. So I don't know. There's just fuck, man. I don't. Iran has all the cards. I think Iran will be very stupid to agree to any ceasefire now. They should just keep pressing. It's gonna happen. Did you not see the stripper? The stripper already confirmed that they're coming in. We're gonna have a Gallipoli. We're gonna have our own Anzac Day. Anzac Day is coming for us.
Next to like several military bases, and something I have noticed lately is all the military guys are coming in and they're spending all of their money, and they're just like, it's sad. Like, they're like kind of depressed, and they're like just coming in like, oh yeah, we're gonna have fun. Like, we're getting, what is it called? Deployed? Like, we're getting deployed next week, or like this is happening. I don't know. I don't want to spread misinformation or anything, but it's just like, a lot of them are really kind, and to see these like young guys that look like my pinky toe, like they're like fetuses coming in and then dancing with them and then being like bye, and then it's actually like making me emotional. Like, it's fucked up.
Okay, the stripper indicator says we're going in. We're going in. Sorry, guys. Whatever. Guess that's what's gonna happen. I don't know. So you're dealing with an enemy that doesn't give a fuck. So that's it, man. I mean, the thing is like, dude, you killed the guy's daughter. You killed the guy's father. You killed the guy. If the new Ayatollah is actually still alive, why would you stop? You're out for blood now. It's like Dune, right? That's why I keep making that joke, man. It's like, dude, this is Dune. This is Paul Atreides, man. He's fighting the damn the Emperor Harkonnen is us. We're Emperor Harkonnen. Are we Emperor Harkonnen, or is that Bibi Netanyahu? Bibi Netanyahu is Emperor Harkonnen. Whatever. Yeah, I live in America. Yeah, but America's huge. I don't know everything going on in America. So that's this is the link, UG on YouTube. Okay, go there. Everything I show pretty much will be in the description. If it's not, I'll put in the description later on my channel, I guess, or I'll mention it again later. Okay, that's it. So, and you'll have to ask Kitchen Man Dan. I assume he's gonna get deployed soon if he hasn't already. Kitchen Man Dan's in the Navy. Anyhow, okay. Let's read this one. Okay. Let me read this one. And let's go from there. So let's look at the software stuff now. Okay, I'm not going to read any more of that. Oh yeah, this requires me to get the other link. Okay, never mind. Okay, here, this one. Okay. So I was talking about the yields, right? So the yields, Treasury yields lose some steam to end the rising week as President Trump postponed deadline. And then if you look at, we're not going to talk about the UK gilt, but the gilts have gone up. So the UK bond market, sovereign bond market, did not like what's happening on Friday too. So that's not good. And JGB demand is seen under pressure amid Mid-East tensions. Okay, so this is it. Rising energy costs and further yen depreciation are likely to weigh on JGB demand, says MUFG Bank's Derek Halpenny. While foreign investors purchased a significant volume of super long JGBs in February. So appetite is weakened. So that's pretty much this is what you want to see. You want to see this happen, for gold and silver to bounce. More gold than silver. Silver kind of follows it, but more gold. And then you see this gilt market. So you kind of, so if you, some of you guys in the UK, then you will remember what's her face? What's her that female prime minister? Who's her face again? That female prime minister. Oh man, she only lasted like what, 1 month or some shit. Liz Truss. Oh yeah, 50 days. She lasted 50 days. Yeah, she got kicked out because of this kind of stuff. So the bond market kicked her out because everybody in the UK bond market said, your budget proposal is dumb. And so everybody sold the UK government bonds, and then the gilt yields spiked. So I don't know about your current PM, what's going to happen, but he can do the same retarded moves. And if the government bonds keep spiking, and yeah, he'll get kicked out pretty soon too. So yeah, you know, your government is pretty easy about this. Like if the stock crashing, you can't kick out Donald Trump or anything. But in the UK, you can. The bond market will tell you who's the boss. The bond market's the boss. So there you go. Let's see here. I'm no fan of Trust, but it was a snitch. Did you mean a snitch? Oh, Stitch Up by the Bank of England dropping a huge QE. I kind of remember that. I was watching a lot of Bloomberg TV that time. So it was like a lot of overnight Bloomberg TV. So I caught a lot of the Asian and the UK coverage. So and it was kind of like something to watch while I waited for the market to open in the US. Yeah, I don't watch much Bloomberg TV anymore. Bloomberg TV that time was pretty funny. They had a lot of like really good reporters, actually, like pretty solid reporters. Now it's just kind of like too much like CNBC now. I did a deep dive on the UK. Don't know if the PM will leave that soon. Yeah, I don't know. Parliamentary politics is kind of like something I don't understand too much. So a lot of Americans don't understand it. So anyway. Okay, next article, next thing. So we gotta watch the gilts. We gotta watch the JP. I mean, not really the gilts. If you're doing gold and silver, it's definitely more the Japanese treasuries. Okay, they're government bonds. Okay. What else? Let's see. Let's focus on the Japanese bonds now. Let's go here. I'll read a few paragraphs of this one. I'm not gonna read too much, you know. Let's see. Did it finish downloading? Then I can play some videos for you. A couple videos. Okay. Finish this one. Okay. Then I'll finish downloading this one. I'm not gonna play the whole video. It's just gonna be like some clips. Come on. All right. Holy crap. Okay. Reload it. Oh man, I gotta reload this whole thing. Oh god. Waste of time. All right, let me just read this for you. Japanese bond yields surge on inflation and BOJ signals. All right, Japanese government bond yields on Friday with 5-year yields hitting a record high. Yeah, it's a new high as the Middle East conflict and recent central bank signals heightened inflation concerns and led investors to reprice the path of rate hikes. So all this stuff here, okay, is good for gold. All right. So far, gold's been going down because the dollar has been increasing. And and people have been selling it. So we saw Turkey, right, selling it, but I think that's over now. So I probably can't say that gold is a good taco trade like it was. It was pretty good taco trade last week, but I guess I'm gonna change my mind. Okay, so that's what I was talking about at the beginning. So now you kind of fully understand it, why this is happening. I'm just like, wait a minute, the Japanese are not doing this. That's why this shit's so complicated, you know. You kind of like you just can't learn one thing. Gold has a lot of inputs that go into it, which makes it a very good trade, because oil will affect it through yields. And if you get the gold miners to short and long, gold miners require cheap energy to mine gold. So oil and natural gas going up hurts the miners. So you have a multiplying effect. So when this stuff happens, gold drops like a freaking rock off a cliff real fast, right? It's just like woo. And then now it's like, well, okay, it's stopped dropping. So is it gonna drop anymore? I'm like, maybe not. Maybe now it's gonna go up because of Japan. And it's like, what? That makes no sense. It's like, oh shit. So yeah, so this thing is like, oh. So if the Japanese yields start popping because they're running away from the Japanese yen and Japanese bonds, and that might push gold up. Even if oil is going up, then gold might go up fast enough that the gold miners will go up again. It's just like, wow, all right. That's crazy. Anyway, currently the UK has a socialist government that's deciding to kill the nations. Good save by Starmer to not get dragged into this war, though. Yeah. I think that's a good decision. He didn't get dragged in. I mean, they are using the bases to fly out the F1, and there was like some strata fortresses being flown out of some RAF bases. But so far, it's pretty limited. I don't know. Iran can't hit the UK, maybe, right? They tried to hit Diego Garcia, though. You remember Diego Garcia, that whole thing? So that kind of got into play. So, yeah. Let's see what happened next. All right, good. Okay, downloaded all that. Okay. Let me move all that stuff in. I can play these videos. I think this is going to be important. Well, not important. Maybe it will help you understand what I was trying to say last week on Sunday night around this time. Then maybe this guy can explain it better than I can, you know? Because I'm not an options guy. Okay, got that video. Good. Okay, load it up here. All right, do that and... Oh, okay, this video. Good. Okay. All right, good. 2 videos. Good. They hit Cyprus. Yeah, you guys do. I visited Cyprus once for a conference. Yeah, you guys have bases down there. I actually wanted to play like this video where like they were trying to say like if you want to go into have a tax haven, you know, you got Jersey. You got the Channel Islands like Jersey, and then you have Cyprus. Cyprus is another place where you could have good tax haven between the UK and the EU. So there's a lot of places that have kind of like that shared ownership. It's like, okay, Cyprus is in the EU, but the UK is not in the EU. That gives you some kind of like interesting tax haven and shit. Yeah, the Isle of Man is another interesting one, but I think Cyprus is more interesting because it's like you can actually you're right next to, you're in the EU technically, but not, right? But so you can have this weird tax haven because of all the laws that get mixed matched. Yeah, some funny shit.
Hello, everybody. Today is March 27th, 9 a.m. Pacific. Let's jump right into it. Just tell me if you see my screen, if you could hear me, and that will be my cue to start talking about Bitcoin. Yeah, trading view. Okay. Yes, okay. Big block. Okay, thanks. Yeah, drop the questions in, you know, if you have any questions.
Thanks, Quantum Epic.
We'll go through those. So there was a lot of volume coming in.
Yeah, Eric W. I think software is the taco play. Yeah. I mean, gold will go up, but maybe software will go up more. You know what I mean? But then if taco disappears and we put boots on the ground, then gold will still go up. Maybe. I don't know. Something like that. But yeah, Bitcoin follows, and then you had software. So Bitcoin matches software very nicely. Right now, they're very correlated. So watch this chart analysis.
You know, here. So this is meaningful, but meaningful in which way? That's the key. Meaningful that we're gonna have demand coming in at this point, and we're gonna have, you know, like some kind of trading range. Yes, locally that means a lot. Meaningful that maybe at the previous points here there is more volume, right? So there is almost I don't know, not ×2, but maybe like plus 60% or something like that. So that's significant demand coming in. What's happening in the structure from this to this? Yeah, seems to be like we need to have some kind of similarity. We do. But look at the texture of both structures. What do you see there? Which one is more bullish? Yeah, let me ask you this question. Why am I the only one who talks all the time? Which structure is more bullish? 1 or 2? What do you guys think? I mean, I'm gonna say this. I think in both cases, the price will go down. We know that for sure in case number 1. In case number 2, okay, I see some answers. Okay, 1, 2, 2, 2, 2. Okay, 1. 1 has less volatility. 1. Okay, interesting. 2. Yeah, well, thank you for all of the answers, guys. My personal view here is that 2 is way more interesting in terms of the bullish case. Why? When you look, let's say, at the volume that is coming in initially, we definitely see the discrepancy. There is way, way, way more volume coming in at 2, meaning there is way, way, way more demand coming in at 2. Just basically on that, on how much effort of the opposing force is being introduced, you could say, I'm expecting a more bullish structure. Well, in which way? There are so many ways that you could describe the bullish structure here more, right? Someone said, okay, well, let's continue with the volume analogy, right? So I just looked at the beginning of the trading range, the stop in action itself. Look at the volume regime here and look at the average volume here in this structure. This is the second one is definitely better, right? So there is more buying that's happening. Institutions are coming in and they are already, even though the price might go lower, and some of them will leave this position, you know, they just so, okay, well, I see something here, so I'm gonna come in. Okay, another thing, someone said volatility. That's correct. But I was looking on the volatility in terms of the ability by the demand to rally and the measure of volatility to the upside here. Look, is this better than what we had here in case number 1? Yeah, absolutely. Demand is better. Again, the biggest mistake is for students to do is oh, he's talking about that demand is improving, I'm going to open the long position right now. Incorrect. Misunderstanding. Not even misunderstanding. Not understanding the concept. Improvement by the opposing force, or the introduction of the opposing force into the structure, does not equate reversal. It only means that preconditions are being formed for the actual reversal. I'm going to say this again because I know a lot of you are either listening but not skipping this because you don't see this as a very important point, and I do. Because I've seen this mistake over and over and over again. I always say the emergence of the opposing force is not the license to sell the position. It's the license to consider what kind of test, immediate test, it's going to have, what kind of continuation into the exhaustion move it's going to have, what kind of tactics you are using here. We absolutely in training insist that there is a substantial trim at this point, a substantial trim on the volume increase right here into this stop in action and here, and not a light trim, not a 10-20%. Those are not even trims. If you're gonna trim, you have to take profits and pay yourself, significantly. Okay, other things here. Look, I mentioned volatility. Through volatility, you see the character and the texture of these two structures. Demand spread is to the upside is much better than in the first structure. Yeah, you could say that, well, what about supply? Also, maybe better. And that's the whole idea. There is an idea here that there's going to be a continuation. And actually, this idea is not a new one. At least, at Wyckoff Analytics and myself, I've talked about this analog. When you look at the decline of these drawing tools in TradingView, I think I'm going to complain about those forever. Yeah, so we're looking into this move right here, and we're thinking about the fractal for this move here most recently. So, and I have a slide somewhere on this, but I'm just going to draw here. Okay, so from, let's say, 0 here, 0 here, we go into this one right here, yeah. Yeah, so this whole thing here is 1. Then this. 2. 2. Then we have, look at how the volume profile unfolds into this point right here. You see that? And look what happens here. All right? So that's my 3. And then this 4. I want to note that demand actually improved here, structure to structure. So to me now, I'm thinking some kind of last move, some kind of maybe exhaustion. So in this case, this was faster. In this case, duration increases. So again, even though I think that this substructure is going to fail with some kind of continuation, right, into some kind of confluence of this line right here, all right, then this downtrending line right here, confluence of that, and then very significant buying here and on the breakout right here, right? Note how here we're stopping as well in the same space. So this is the point where we always gonna have some kind of significant emergence of buying and selling at the same time. So I think around 50 is a very, very important level for us to just watch if the price going to continue down. And then if this was 3, this is 4, then we have to have 5, some kind of climactic event, some kind of shakeout. Well, didn't Bitcoin shake out a lot already? Yes, but historically it could be more. I mean, like, look at this volume signature here. Like this. This is just ×2. So how about that type of the event? Behind what? Well, what if the market crashes, as you know, we've been stating for like weeks now, in a flash-like manner? So then that's what would be interesting, because then we would have the liquidity event, like a climactic action here, and then we could go into the structure, the trading range, and so on and so forth. So I wonder if, you know, like, we're just finishing this fractal here. Questions? I'm gonna go to S&P right now. Okay, so maybe, yeah, there is some kind of like expectation here. Could we still go down behind the volatility of the overall market? Obviously, geopolitical events, specifically Iran. And I just don't see this big up bars, like this one, and this one, as anything but a bluff. It seems like they're so strong, but look at what happens immediately. We have either disproportionate decrease in the follow-through, both in spread and volume, or immediate down 4 bars, with one of them is on movement. This was a great call, by the way, and I traded that day. That was like good money there. Disproportionate deterioration is no follow-through. Disproportionate deterioration is. There is no change in this pattern. Like, I don't see it. And to me, what I'm seeing is more of like acceleration. The ability of the price to go through this process now faster. Look at this. The last improvement is there. So therefore, if before I was thinking, when we were starting to go down and we were talking about the texture, like, we're gonna go down, but it's gonna be like choppy. Going down, sharp reaction. Going down, sharp reaction. If you guys not familiar with what we do, and you might have a question in your mind, like, how the heck would they know that, right? How the heck would they know that the price would move this way? It's there. It's on the chart. It's just that it needs to be studied and needs to be seen. And once it's seen, you know, you know what to expect. My expectation was here. That was my first meaningful level. And I'm still thinking in terms of what could happen in the next, let's say, 2 to 3 days, and maybe like 1 to 2 weeks. I do not see almost like at this point, we are at the point of no return, where there should be some kind of market resolution to the disturbance on the supply chain and how the technicals deteriorated, to go without any type of like selling climax, flash, capitulation, increased volatility, increased liquidity event. even if it doesn't happen now and we have some kind of rally, the next move has to be that type of capitulation. There is so much exchange that we see in this movement here, in this structure. There should be, on the other end, the climactic event, some kind of liquidity. So the structure will depend on what happens in Iran. I think myself as a higher probability, they put troops on the ground. That spooks the market, creates that high volatility, because everybody is going to start realizing the oil prices, the high oil prices, are here for to be that high for some time. So therefore, there's going to be not just a short-term spike in pricing and short-term spike in prices in general and in inflation, and therefore interest rates. And the Fed might have to push the rates up. But if it's going to even stay here until the end of the year, imagine that. That's a huge, huge, huge drag on the economy. It's not even a drag, it's just a derailer. So with that, the expectation would be that the market, seeing, for instance, like, and it was pretty evident in 2022 with the Russian-Ukraine war, like the first 2 to 3 weeks. Is it going to be done quickly? Is it going to be done? And then you kind of start seeing like it starts to go into the next month. So this is when you start realizing like, okay, this is going to last at least until the end of the year, because they couldn't resolve it immediately. I get a sense of this Iran, like war is kind of unfolding the same way. So therefore, there's going to be some more volatility to come with that realization. And institutions are hedging already now. Whatever volume we see here, all of this is already some kind of hedge against what's coming. So if this level is maybe like taken, because what if climactic event is being produced now, right? Yeah, Michael is saying, if today's close is above the last week low, S&P might have short covering. Yeah, until the attacks on the Har Island. Yeah, I agree. And we were looking at the scenarios where we come to this level and we rally and then we still go down. Something, well, not necessarily that deep, but I was thinking about what's the next level. I'm feeling this right here. Oh, really? Wow. I'm really having struggles with the drawing tools here. Okay.
Yo, damn, there's 2 of me now. There's 2 of me. All right, StreamYard's fucked up again. Anyway. Hold on, let's go. Let's continue. Let's go. Let me pull it back a bit. Oh my god. All right. Let's put this back. Okay. There's two of me. Put this away. Okay. It removed all that. All right. Okay. Let's see. Where were we? He's about to explain his little target. He matches mine, right? Yeah, he's basically saying what I. Okay.
On the supply.
Yeah. All right.
That's a huge.
Yeah. Okay.
6,000.
Okay, here.
About this, could we rally from here? Yeah, we can. Like, come to the previous level.
Okay, yeah, go up.
Show that weakness.
Yeah.
And then have a flush. Okay, where to? I was thinking about this.
Yeah, okay, the Wyckoff guys agree with me. Yeah. Ugg on YouTube does not like this charting stuff. That's what I do. I use charts. Yeah. Man. Anyway. Yeah, fundamental Bitcoin guys, yeah, they all become a religion eventually. A lot of fundamental people become a religion. It's like the gold guys too, right? And silver guys, you know? I really don't care. I just look at the chart and I'll trade it because it's all psychology at the end of the day. In the game, anyhow. I mean, unless you really want to do long term, you can do that. But at this point, I just rather just build up my wealth, just getting 10% here or there. Well, I don't need the wealth. I mean, you guys, right? Because we're going to be in a different world, a different reality. So the markets are going to act differently. Things are going to act differently. There's a lot of things going to act differently. Yeah. The crown dependencies. Yeah, I know that much at least. Yeah. There's just really good tax benefits there. Not only America, Myanmar. So the two countries where you move to another place to work, you. Oh no, it's just StreamYard again. I don't know. Oh, I probably won't. I mean, I don't pay for StreamYard here, but I'm probably just gonna use OBS or something because this is getting ridiculous. I don't got time for this shit. Anyhow, yeah, Myanmar and the United States, those are two. Let's continue on. All right, 19.
Also like this in one day. So
all right, yeah, I think it's gonna do this. I pretty much align with what he's saying.
Basically going from one level to another. Yeah, that's definitely it would be great, you know, like as a possibility. Also like the idea of, let's say this is S&P. Yeah, okay, somewhere here. Yeah, this high. Because this is where supply has improved. So there was selling that was coming in that led us into this exhaustion. Now, this is probably still, this scenario right here could be one of the best scenarios out of all of the worst scenarios. Because when you look at the whole structure of it and you start thinking, well, what's the worst scenario? Like immediate worst scenario that we could possibly have. And it's this. Test, test. We have a shakeout right here. Could we go and retest this level? Then this would be something akin to, in magnitude, to what we had here. So that kind of makes sense. There is a fractal here which is much larger than this. So that also makes sense, you know, like to go that deep and to have that causality. It has the texture of the second leg that's have to be at the same level, like something like this, where the last leg accelerates and accelerates behind the news. This is news. This is news. So, and yet we are on the top of the 22, 21 highs here, right? So this level becomes the level of importance. And then no matter what we do here, from here, I mean, like we could be in a much larger trading range for some time, like in this area right here, all right? Because if oil is still going to be at the higher levels, like there is no way not to influence the economy at those prices. It's just the whole restructuring. In some ways, I'm feeling that, you know, supply chain, you know, problem is akin to what we experienced during COVID. So therefore, there is this idea of the speed, short duration for quick moves, capitulation type of moves. And I'm still not seeing it. So I bet you that a lot of you probably feel the same way about the market, just in general. Just give me some kind of liquidity event. Give me some kind of capitulation, because that instantly gives us an idea where we are in the structure. But so far, all of my shorts are working. I am shorting into the rallies. I've been doing this already like for almost a month and it's working. So I'm not going to abandon something that works until I see change.
All right, so short everything, every rally, short. So that's the game plan, I guess. All right, last video here, and we close it out. All right, here we go. This is more technical.
Have a giant position that's very relevant right now, expiring in just 7 days. You may have heard about it. It's the JP Morgan put spread collar. In the next few minutes, I'm going to explain to you what's happening right now and what you can.
So this will change between March 31st into April Fool's Day.
Expect leading into the event next week. So why is the market so volatile right now? It's pretty simple. JP Morgan is the fund that buys this put spread collar. What they do is they buy a put spread and they sell a call to make this trade even money for them. Their investors won't touch it again. But the market makers, like us on the other side, who manage this position, have a couple of problems to work through. Namely, we have a giant short options position at 64.75 this cycle, which is right around where the market is right now, which gives us a tremendous amount of short gamma to hedge in our position. Now, this amount of short gamma is significant. It changes.
All right. Maybe he lost you there. Maybe you don't know what gamma is. I tried to explain it a few times, right?
Changes the entire character of the market, as you can see. We don't get 200-point moves in 30 minutes when we don't have this kind of position. But what is everybody saying right now about the level itself? This word here. You probably read it in a million different comments by now. People are claiming that we are pinning the put strike in the JP Morgan collar. Now, I just want to clarify one thing with this video. We are not pinning. This is the opposite of pinning, literally, and I'll show you how it works. So, as a market maker with an option position, you can think about it very basically. You're either long an option or you're short an option. In the JP Morgan collar this cycle, the fund has bought a put spread collar. Now, the two strikes that matter for us right now, 64.75 71.55, notably way out of range, right? We're in between these two strikes. The position size is about 35,000. Now, what's happening right now with the market around the short option position, this short option, negative gamma in our portfolio. That gamma is maxed when we are close to the strike, when we are close to expiration, both of which are happening right now. So this position is driving market behavior. Now, are we pinning? Not necessarily. Pinning is a very specific.
Right. Okay, hold on.
Strike when we are close to expiration. Notably,
Bro, it happened again. Oh my god. Yeah, I think the StreamYard is getting There's two of me again. I wonder if like the Israelis are getting bombed to hell right now, and the whole AWS nodes are getting smacked around. Yeah, because I don't know what servers are is StreamYard's even on. So yeah, if they're on the wrong servers, I guess they're fucked. Okay. Blah blah blah. Okay, let's see. All right. So the second me disappeared again. Let's continue on. We're almost done, guys. Let's just get
a giant
this
position that's very relevant right now, expiring in creates negative gamma.
All right. Actually,
right?
All right.
In between these two strikes. The position size is about 35,000. Now, what's happening right now with the market around the negative gamma in our portfolio? That gamma is maximal when we are close to the strike, when we are close to expiration, both of which are happening right now. So this position is driving market behavior. Strike, when we are close to expiration, both of which are happening right now. So this position is driving.
Well, I think that pretty much explains that you guys are getting too much information. Yeah, I think so. I think they don't want you to know this shit. I don't know. Weird timing there. I don't know why it's having so much trouble now.
A giant position that's very relevant right now, expiring in just 7 towards their market behavior. Now, are we pinning? Right?
All right, blah 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 blah. Let's go back.
35,000. Now,
okay.
What's that matter for us right now? 64.75, 71.55. Notably, way out of range, right? We're in between these two strikes. The position size is about 35,000. Now, what's happening right now with the market around the short option position? This short option creates negative gamma in our portfolio. That gamma is maximal when we are close to the strike, when we are close to expiration, both of which are happening right now. So this position is driving market behavior. Now, are we pinning? Not necessarily. Pinning is a very specific mechanism that takes advantage of two things, gamma and charm, both of which combine to do a very specific thing in the market maker's hedging process. That thing has the effect of compressing price because market makers hedge in every situation towards their strike. This happens when you're long an option. If we were long the option at 71.55 and the market was trading around it, you could say we were pinning. Because if we were on top of the strike, The simple passage of time alone, or charm, would make this call option more and more in the money. If the call option is a 60 delta, we need to have 120 futures short for every 100 option. If time passes and it becomes a 70 delta, that number changes. We have to sell an additional 20 futures just to stay delta neutral. And here you have the passage of time alone sending us back down towards the strike. Now, if we're on the other side of the strike at expiration, the same function happens, right? You pass time, and because the call option is a 40 delta, but will be a 30 delta, we know that we'll have to buy back some of our hedge. And it's the buying back in this state that pushes us back towards the strike. This is how pinning works. But note, we're long that option. Now, the hedging flows, as you might expect for a short option, are exactly the opposite.
Okay, so I've been trying to explain to you guys this thing for like over a year now. And then last week I brought it up again on that Sunday night, the JP Morgan thing, okay? So that's why when you get towards that top level, 7,000, whatever he was showing, that's the limit. So if we get over that, the JP Morgan options start getting to effect and you just get magnetized back down. You try to get magnetized toward it from the bottom and you get magnetized toward it from the top, okay? So you can think of it like I told you last time, it was like bowling. You have guardrails. Every quarter, the JP Morgan ETF sets these new levels. So April 1st, they'll make a new levels for us, okay? Then we'll know where the guardrails are. So the S&P 500 moves in between the blue line and the red one. So he's going to explain how the red one works now.
Opposite. So if we're pinning here, what's happening here? Market makers are negative gamma and charm is going to work the other way. So as we go down, we have more futures to sell, right? It creates acceleration in the direction of travel in either direction. If we stop going down and go back up, we can reverse significantly the same way. It's not about direction because of gamma. Gamma just creates a force amplifier. Buying makes the market go up farther. Selling makes it go down farther and faster. But what about the attraction to the level? There isn't, right? What's happening right now, for example, is the opposite of this. If we are above the strike at 64.75, for example, trading 65 path, and this option is less than a 50 delta, remember, we're short put, we're short futures. If it's a 40 delta option, we're short 80 futures for every 100 options that we're short. As time passes, and today becomes tomorrow, that delta is going to change. It's going to approach zero. And as it does, the delta goes from maybe minus 40 to minus 30, and that requires us to buy back some of the futures which we're short. And again, this is a negative gamma environment, right? So even our buying back of our own hedge can start the ball rolling where we have to chase it even further, right?
So that's why I said Sunday night, that Monday morning, we would bounce because we got towards that level. So this is like a magnet, right? The blue one attracts, the red one repels. Okay, or you could think of it like static electricity or something like that too. I don't know. Static electricity doesn't repel, does it? I don't think so. Like all the fabric and feathers keep going towards it. So something like that. And he's talking about delta charm. I'm not getting into that anymore. No. Okay, you can go to an options channel and learn more about that. But yeah, you have to learn the Greeks. The first level is the gamma, the delta. Maybe gamma is second level. I don't know. And then after that, you got learn charm, Vanna, whatever. And you got to do all the math about it. But for the simple layman, all you got to know is every quarter, every 3 months, you figure out where the levels are. JP Morgan gives you the levels. 7,135 on the S&P 500 is the top. 6,475 is the bottom. You get to the bottom, you know there's going to be a bounce. You get to the top, you know it can't get any further than that. It has to retreat. So you get stuck there. So you know where the limits are. Okay? That's really all you have to know. Every quarter, every 3 months, you know that is the maximal and minimal every 3 quarters. Now, if you get below this red line, right, that means we have a serious situation. We have a serious news event that changes everything and that people have lost faith and we are in correction. COVID-19 was one of those events. Some other ones you probably know about. So And now that we're going into April, people are probably thinking like, oh, it's going to be way easier now to crash the market because this red line is going to disappear and there's going to be a new red line at a new level.
We buy back futures and all of a sudden the market follows on. And we're not providing liquidity, we have to take it as well. And so CHAR can start the process and then negative gamma can force us away from the strike. If you think about every possible scenario around both strikes, they're exactly the opposite. In this situation, if we're long the call and we're near the call at expiration.
No. This is specific to options market. And they don't even use Greek letters after that. Like Vanna is not a Greek letter. So they start making up their own letters. So the first level is rho, gamma, delta. And then after that, they create something called Vanna and charm. And it's like, what the fuck? All right, whatever. So anyhow, yeah. Okay.
Say 70 delta.
Okay. Let's go back.
But
here.
will be a.
Okay.
That's
Okay, covered that.
going to work the other
Right.
direction because of gamma. Gamma just creates.
They're not even letters. They just made up terms. I don't know why. They could have just kept using the Greek alphabet. I mean, I don't know. Maybe one day I'll go over options again. Oh man, I'm just really not an expert, so I'm not really qualified to really talk about it. You should just go to Jem Carson, and look him up. And then there's a Talib Nassim, who wrote the book about the whole Black Swan stuff. He also wrote an options book too. I don't know. It gets pretty esoteric after a while. I don't think unless you trade it, you don't need to know too much, but you should know about it because that really informs what you have to do every quarter, every options expiration, and then you know what's going on top of that.
It's a force amplifier. Buying makes the market go up farther. Selling makes it go down farther and faster. But what about the attraction to the level? There isn't, right? What's happening right now, for example, is the opposite of this. If we are above the strike at 64.75, for example, trading 65 path, and this option is less than a 50 delta, remember, we're short put, we're short futures. If it's a 40 delta option, we're short 80 futures for every 100 options that we're short. As time passes, and today becomes tomorrow, that delta is going to change. It's going to approach zero. And as it does, the delta goes from maybe minus 40 to minus 30, and that requires us to buy back some of the futures which we're short. And again, this is a negative gamma environment, right? So even our buying back of our own hedge can start the ball rolling where we have to chase it even further, right? We buy back futures, and all of a sudden the market follows on. And we're not providing liquidity, we have to take it as well. And so CHAR can start the process, and then negative gamma can force us away from the strike. If you think about every possible scenario around both strikes, they're exactly the opposite. In this situation, if we're long the call and we're near the call at expiration, everything is like magnetism. Whether it's because we're moving higher or because time is passing, all of our hedging flows are pushing us towards the strike, whether we're above or below it. But here at 64.75, if you just think of the market maker's contribution alone, what's actually happening is like trying to put two magnets of the same pole together. Every single flow from the hedging model pushes away from the strike. That is not pinning. That is the opposite of pinning. So is this manipulation? No, it's not manipulation. This is actually one of the most basic vanilla options trades that you could possibly do as a long equity investor.
So this is why this ETF is so popular, is because people don't know options. They can just buy the ETF, and the ETF automatically creates an insurance policy for you. You can buy the SPY, but it doesn't have insurance. You could buy JP Morgan's version of SPY, the JQEHX, whatever the hell it's called, and you get SPY, but it's insured for you. So if you get like below that red level he was showing you, it would protect you from losing. You would lose less up until 20% down from the peak. Okay, whatever they set the peak as. However, if you get towards the blue level and above it, That's the problem, because you can't make money above that blue level then with that ETF, because you get lower and lower results after that blue level. So if the market decides to go higher than what JP Morgan decided the top was, you don't get much out of it. But because everybody is buying that ETF because they're so lazy, this ETF becomes so powerful. Okay? Think about it. You buy that share, one share. Billions of people buy one share of that ETF. Guess what happens? Every share you buy of that ETF initiates an options trade. The more you buy, the more options JP Morgan has to buy and sell. The more futures they have to buy and sell. And that controls the market now. So that's the tail wagging the dog. The derivatives market actually controls the real market. That's what happens. So anyhow, you're banking on low. Yeah. So we're going to have a bounce next week, and then we're going to crash the following week, something like that. Unless we get boots on the ground April Fool's Day pretty soon. So the poly market, the betting pool over at the gambling guys, it's like they think it's going to happen within 2 days or something. So I don't know. I don't know how reliable those idiots are over there at the poly market. It's just a bunch of degenerates or something. Who knows? But yeah, everybody's betting on boots on the ground before April Fools. So it could be earlier. But I do expect at least 2 days of a pop, and then we'll drop. But I've been long oil since February, and I pretty much closed out everything on Friday. It's easier just to be long oil. That's the best play, man. Yeah, I don't need to worry. But I've been trading here and there, some short here, short there, long there, short there, a little swing trades here and there. But I don't like that. I'd rather make most of my money on betting big on something that lasts a month or two. I thought the oil stuff would take a while to get to where I thought it was going to be, but it's pretty early, thanks to the war. So I'm out. Yeah, I'm pretty much out now. So, okay, last thing to show. This is interesting, I think. Poly had Iran strike at 20%. Wouldn't I don't know. The whole thing here. It's this one. I don't know how old this one is. So 70% April 30th. $50 million wagered. $50 million isn't a lot, so I don't know. This shit is like whatever. I don't know if I trust this crap. But I do think like we will pop, but I just don't know how long it'll last. The other thing too is like you watch this, you like this thing is pretty bad here. U.S. households now own a record 52% of their financial assets in equities. Bruh, this is more than the .com. What the fuck, man? So everybody's in stocks. So, dude, any hiccup in the stock market, oh my god, get the hell out. So I think the coming 2 years are going to be pretty bad if this is the case. If people are really putting all their money into this shit. Now this guy is pretty clever here. Watch this. I think I finally solved the stock market. I just put 50% in tech and 50% in energy. So since COVID, I would make I would still be in profit. So so ignore everything else. Just put 50% of your money in tech, 50% of your money in energy, and I'll be safe, right? Yeah, all right. That's really something. Amazing. That portfolio probably is the best one to have those in the last 5 years since COVID. So whatever, man. We're in interesting times. Let's put it that way. I think a lot of people betting on bonds or something. Like people usually just try to do 30% bonds or 40% bonds, 60% stock, and then go back into 60% bonds, 40% stock. I don't know. I don't think that shit works anymore, man. Honestly. And I know people have said that before. People have said that doesn't work. And I talked about it in my earlier streams. So we got Iran right now here. So the black blob is oil. So we're down here. So this is the Russian-Ukraine war. So the peak of oil is like a month or two before the bottom of the S&P 500. The Gulf War in the 90s. Peak of oil, yeah, pretty much a month or so before the final bottom. We don't even know what the peak of oil is right now. So anybody that thinks this is a real bottom, you better be wary. It's already been a month. I don't think this is going to end quickly. So, yeah. Yeah, there's definitely a lot of insider trading on the poly market because poly market is unregulated and the US doesn't allow poly market. I think they still don't. So, yeah, there's a lot of bullshit going on over there. Yeah. Anyhow, yeah, I'll just leave this up and you guys can take a screenshot of that. But I'll see you around. All right, guys. We'll see you tomorrow, I guess. But I think if you go back to the beginning of the stream, I said I'm doing WebL and 𝑓IBU. Yeah. So these are the leverage ETFs I'm gonna do. Yeah, WebL and 𝑓IBU. So 3x leverage is the WebL, 2x leverage 𝑓IBU. They kind of have a different mixture of stocks, so I want to combine them. I don't know what percentage I want to do because, like I told you about oil to do what 60%, or what was it, 70%? I don't remember now. Well, how much percentage I tell you the NRGU and 30% Gush? Was that it? Something like that. But if you look overall, NRGU plus Gush, I think, yeah, combined overall worked well. Only last week, UwU kind of did better for the week because of Friday. But the overall performance of the 2 weeks, NRGU plus Gush, I think still did better. I think I'm going to still stick with that if we want to get back into oil companies with leverage later. The mixture of this, I don't know yet. I guess, I don't know. I'm just making it up then. I'm what's 60% WebL, 40% 𝑓IBU, something like that. Who knows? Yeah, 2/3. Is that what I said? Yeah, 2/3. I don't know how I came up with that. I need some more mathematical analysis on why I would decide on any of those things. Like, why did I do that? Yeah. So, anyhow, but yeah, I think you made 100% gains on UwU if you stuck with UwU from February. I think that's it. But from now on, we're going sideways. I think it's better to short the next leg down. You'll make more money than longing oil. That's my thinking. I don't think oil has much more to go than the market going down. You'll make more money going short. Yeah, oil's not going anywhere. It's the final peak will be 2027 December based on the cycle analysis I made. So that's the final peak. But because of the Iran stuff, it kind of pulled in what I expected oil to do this year. I expected it to go 100% on UwU in about like maybe 4 to 6 months, not 2 months. It's already there already. So I'm kind of like, I think it's better to wait and see than like keep holding it, because 100% after 2 months is just too good to just not sell. It's not like April when I did SOXL and you got 600% from bottom to the top. If you timed exactly the bottom to the top on that one, most people made 400, 500%, right? 300, 400, 500% around there. But we don't have an April type bottom. Oil itself is a little bit kind of funny, so it might be better just to do natural gas now. So I talked about the natural gas and fertilizer. So those two are probably better to look at. So we'll talk about that in the coming week. And then we'll start the Substack, and then I'll show you what prices to get certain things. Okay, that's what I want to do next week. So I think it's finally time, because we're getting very close to the end where we have a big flush down, and that's when you buy the dip. You'll buy the dip. That's the real dip. Yeah, I think so. You're talking about like natural gas, right? From the Shetland Islands up in Scotland. I don't think you're talking about petrol, right? Yeah, not petrol. Yeah, you guys call it petrol, so talking about gasoline and all that shit. Yeah. I mean, that's the easy play. Yeah. Oh, fracking. Oh, okay. Yeah. I guess you'll have to fix your government if you want to keep on fracking, though, right? Yeah. All right, guys. I'll see ya.